G'day all, Benny Rees West. Going to have a little bit of a look at gold here today. Some interesting stuff, I think, because the way the market's now behaving after the payrolls number, I would have been looking for precious metals to have a bit of a rally, but they haven't done quite what I would have thought. So let's just jump in and see if we can pick anything up here. Now, I thought I'd just start here just very quickly. Just looking at the dollar index, okay, so, you know, the relative strength of the US dollar against a basket of currencies, but of course mainly the euro and the yen, but it's the best proxy we've got to US dollar strength, I guess. And after that payrolls number that we've just had, it's not a surprise that, the markets being the markets, that they're now rapidly running back towards, oh, well, we're going to get cuts and we're going to get cuts soon. So you would think just as generally that's going to put pressure on the US dollar. And you can see here that we just, we had the run as the rhetoric about further tightenings sort of went up as we had through here. But, we stalled into this here, and now we've just broken back down and we're coming back in to test this retracement level off the last swing. Now, just looking at the swings themselves, you can see here that this swing went for 33 trading days and travelled 4.33%. This swing, the next one, only went for 26 trading days and its distance was only 4.6%. So what that means is that this swing was more powerful than this swing. And so what I'd be looking for, generally speaking, is the same phenomenon to come back the other way. So this downswing went for 17 trading days, fell 2.49%. So for this next swing to outpower this one, the market's going to have to fall a little bit further yet. So you can see that if it was going to come down here, what did this fall? This has just got to come down a little bit further to sort of back down here. So that, for the market to come down here in this sort of time frame and that magnitude, it's going to come down here into the resistance, the retracement zone, and test out this. So I would expect that that's what's going to happen, generally speaking, with the US dollar. But what's the ramifications? Because we're looking at gold here. But I just think whenever you look at anything that's priced against the US dollar, you've got to consider what the US dollar is doing, because, of course, that's going to have an effect on the price of what we're looking at. So we're looking at gold against the US dollar. Is the US dollar going to get weaker? You would expect so. Does that mean that gold's going to get stronger? Well, you would also expect so, but not so much just yet. So this is how we had been looking at gold. So I was thinking about the idea of range expansion, but we're kind of just starting to move away from that a little bit. I wouldn't say it's necessarily dead. And the areas that we sort of had pinned down the bottom here are still relevant. But I think just the phenomenon that I want to look at today, I'm just going to have to clean this chart up to show you where I'm at with this at the moment. So this was the main retracement play that we were looking at. Pardon me. This was the main one that we were looking at. It didn't quite get there if you take it off the top here. But if you take it off the high that we drove down from, which I think is probably that one, then you can sort of say that we got there, okay? And since then, we have taken out that bottom. But we've kind of, I wouldn't say we've disqualified this downtrend line. It redrawn. You got to be careful with fiddling with that. I mean, it's basically, I wouldn't say it's a be all and end all until you get a lot of nice symmetrical touches. And right now we don't really have that. Okay, I mean, you can sort of draw it up a few different ways, but just as a general guide, you can sort of put a line in there to say, okay, well, if we start getting above here, then the geometry of the trend's starting to break. But I think what we've got to be aware of here is, if this is the first move which thus far has failed to get to the measured move target down here, just going back the other way, just as I'm looking at this, because now we've got this steep movement down here like this. So if I take the top of that off that, and you can see where, once again, I mean, you could sort of take it there, I suppose, and say, we've really reacted once again. We just reacted away from the 61.8% of when we're talking about this move down. We've come up and we've just wicked through the bottom, but we're just sort of stuck here. So it just looks like to me that there's measured move selling, and you can even see off those two swings that the measured move targets are almost sitting on top of each other. So that would certainly be a point I'd be looking very long and hard. I wouldn't be going short there. I'd be looking very long and hard at if the market managed to get down there. But once again, I'm a bit surprised. I thought the market might turn up a little bit again, but what you think the market should do and what the market does are quite often two different things, and you've got to do what the market does. And right now, the gold hasn't really responded as much as I would have hoped. Okay, so I think the first thing, the first box that we've got to tick is obviously to get through this, okay, to defeat that sort of measured move, and then we've got to get through, obviously, this to defeat that measured move. So that's what I would like to see coming into next week. Actually, what would be perfect is if it actually did touch down here and then we started getting, that trending move away. Okay, we don't have that. That would just be what we would like to see. Okay, but that's not there. So we can only do what we can see. And right now, it's a little bit. I got to be honest, it's a little bit disappointing. I thought the market might have responded a bit more. So we wait and see. But right now, I think that's just your point of call. You just got to look at this is sort of the range that the market's stuck in. So we wait and see what's happening between those two areas there. But we know there's going to be more resistance and selling through there. But I suspect there's going to be some buying through there. And even you can just see it, right? It's never just one thing. That would line up with these bottoms here. So there's every reason to think that you'll see some buying in here if the market can get down there. So that's where we sit with that. Now, I thought today I'd just come in here quickly and have a look at the VanEck Gold Miners ETF, because it's kind of interesting, right? I mean, this is kind of playing into a bit of a wedge here. So I think this bears watching. And even within, we're on a weekly here, so even within this broad wedge, you can almost make a point that, we've got another sort of more wedgy sort of pattern coming in here. Okay, so we've got these double tops. So I think whatever's happening, and this is kind of interesting, right? This is kind of why I'm going to watch this in relationship to gold, because there's some very interesting points coming in just here, I think. So we're just here on the daily. You can see obviously this is a very strong move, and now we're just building into a little bit of a consolidation pattern here. But I'm just looking at what's going on. We've got this peak here, which lines up very nicely with these peaks here. So we've obviously got an area where the market's shied away from. But what's even more interesting is when we drag this box back to the left, okay, and it's just starting to play into. We've got this gap here with basically it's almost a quadruple top, I suppose you could say. Let's have a look. Four pretty big tops, pretty big rejections away from there as the market tried to close that gap and couldn't do it. So that gap remains open, and we've had another crack up here in this time last year. Okay, and look, I don't know if there's some seasonality coming in here, but May 22, this is where we were. May 23, this is where we were. Coming into May 24, this is kind of where we are again. So, that in itself is interesting to me. So, just even when I come in here and look at this now, this has obviously been a good strong trend that broke in terms of it stopped going up the rate that it was going up, where it held the higher highs and higher lows. But just looking at this, even though it's a little bit sort of gappy to see, but it just, to me, you can sort of almost now see. Just make that line a little bit more clearer. Just on this, in a broad sense, we've just got the potential here for this to start to form a bit of a bull pennant, I guess you would say. You kind of want it, but we know that these overheads up here are big. So to come in here and fill that gap, that would be massive for the market. Now, I'd kind of struggle a little bit to put Elliott into this. I think if you were going to Elliott, you'd be thinking 1, 2, 3. This is going to be some sort of triangle 4 and a 5. But to be honest, this 2 is so shallow. I'd struggle to call that a 2. And I only really like to use Elliott when the pattern is very, very obvious. And to me, this is not. And even though it's definitely a strong impulsive move, it just doesn't have what I would consider the prerequisite. Oh, it's a prerequisite, but this retracement just hasn't done enough to convince me that this is going to be a nice 5-wave pattern. So I would just discount that for the moment, but I'd just be looking at the formation that's coming in here. So this is just what I'd be watching. So is it the chicken and the egg, in terms of which goes first, gold or the gold miners? Well, I don't know. I mean, this is kind of through its retracement. But, I just wouldn't ignore this pattern. I think, it could just go hand in hand. So if we start to see this break, well, you would expect gold to go with that. But I think the point is that when I'm looping back, even though that gold market hasn't really responded the way I might have hoped, this has sort of made me think, well, this market still looks like it's primed to go higher. So does that mean that we've just got to be on the lookout for gold? So I would think maybe just watch this. If we can start to break away through this sort of, this is only a small wedge, so I wouldn't be putting too much stock into it, but you've got these peaks here. If we can bust through this and really start to get up and to challenge that area, we know that area is big, right? So I just think that if we can get up there and challenge into that area, that that you've got to think that gold's should be responding. I think that's how I would look at it. So I think they're your pointers for next week. I think you just got to watch for this area down here, sort of this 2260 sort of area, 2270 to 2260 for any signs of buying down there or lack of sellers. And then, of course, look for any sort of breaking of the resistance through this area. And, of course, which is what, 2320 to 2325. And then any sort of break of this area, which is sort of 23, let's call it 2345 up to 2360. And if we start getting up here, well, I think, man, we're probably going back into the big picture and saying, okay, well, if all that's going to happen, then I would think that the corrective phase off this rally is over, and then we could possibly look at then powering on further. So I'll leave it there for this week, but that's just how I'm seeing it. Thanks for watching. Don't forget to hit like and subscribe. See you in the next video. Bye for now.